Welcome to the daily snapshot video update, where I briefly go over what happened in the S&P 500 today and then see how things look, just to give you an overview so that if you want to, I also recorded a rather coughing and hacking video that is more of the normal length and where I go more in depth with my analysis of the S&P 500 and other markets. So the idea behind this is maybe you look at this first, it's designed to be shorter. Then if you're looking at doing something, either getting in or getting out of the market, then you can go look at the longer video. Or if you just want to know more information, where if you're very busy and don't have time to really look over the market, maybe this is as far as you go. I just want to give you as many options as possible to help keep you in the loop with what's happening. So this is just the snapshot version of the daily video update. I use the same slides. I go through, I create everything for the daily video, and then I go back over and cut out everything except the slides and then a few charts that I want to show you. So just to recap what happened on Wednesday, we did have a gap lower open, which is not necessarily surprising because we've seen some really solid up days and we're hitting overhead resistance. And so to fall back is not necessarily a surprise. We'll go through and talk about what that means here in just a moment. We were able to rebound up to previous resistance. It's a line that I've had on the intraday chart now for quite some time. Prices moved sideways most of the day and then sank from that level. So that did a little bit more damage than what, if you're bullish, than probably what you were hoping for. And then right at the close, the last 10 minutes, we saw some late selling and we ended up closing at the low. We were down 1.23%. One thing that I'm not sure how to take this, either positive or negative. We had some up days and down days, but we're seeing a real trailing off of volume as the week continues right now. So it's just showing a real lack of conviction on either side. Technically, we're still positive, but we lost some moving averages that we were able to gain after Tuesday's session. We're still coming up to the end of earnings season. We're dealing with inflation and oil, heating oil. A lot of the real inflationary type things did spike up a bit in Wednesday's session. We're also dealing with interest rates. And then, of course, the different geopolitical concerns that I'll address here at the end. I'm trying to keep this video as short as possible so that if you want a longer drawn out explanation, you can go to the daily video itself. The S&P is still out of correction territory. The technicals are still positive, but weakening slightly, which with a down day is not surprising. We were able to get above the 200-day moving average, the simple moving average, and that's probably what is used most by investors. We got above that in Tuesday, only to drop below that again on Wednesday. Prices still remain in a range, and if we do break more to the upside, we're getting close to that short-term double top, which posed some problems not too long ago. That's going to be a real test, and I do have a chart of that. We're still focused on Russia, Ukraine, with that situation changing. We also have the president has come to Europe and is supposed to be meeting with NATO members. That could be positive or negative or irrelevant. We'll just have to see how that all plays out. Inflation and interest rates are what are the real focus right now. And then I still have China on here because of the recent lockdowns. What's that going to do to the supply chain that was already having trouble before? Is that going to bleed over into some continued problems? The economic report that came out on Wednesday showed that new home sales did decline, and we've been seeing a decline in real estate kind of overall in a lot of the different reports that we get. If you look at the S&P by itself without really doing a lot of intermarket analysis, you'll still probably determine that it's overvalued. If you compare it with interest rates, we're more fairly valued right now. The trend is positive and weakening because we did have a crossover in the ADX. The bias, and this is a mistake that I also forgot to change on the daily video, the bias should be negative because we had a down day. However, the momentum overall, the 2, 3, 4, 5 day period, that remains positive. Here is a daily chart showing that we came right up to this resistance. And these lines, some of these lines have been on here for quite a while. And we came up to this point and then fell back. The big question is now, are we going to fall further, or will we get some legs underneath us, work off this short-term overbought situation that we are in, and then get set to go higher? And then here is the double top that I'm talking about, which is right about at R1. So we have some pretty significant resistance overhead if prices bounce back up. We want to respect that we had the down day, but right now it's just looking like a little bit of a pullback after going up pretty far, pretty fast. And then down here at the bottom, you can see where as the week has gone on, Monday, Tuesday, Wednesday, volume has been dropping off quite a bit and is well below average. Here's the ADX. The lines did cross, the green line's on top, the red line's down below. But as these lines remain close to each other, the ADX continues to decline. So, and we probably should revert back to the previous trend, because the trend that was being picked up during this time was a downtrend because the red line was on top. If we turn back up, this green line is just going to have to really spike up big time. Then the Arun, which was really looking more positive after Tuesday, it declined a little bit, but we're still very near the top. Selling pressure is still declining, and the oscillator crossed above zero, even though it was flat overall for Wednesday. So this is still looking positive. Our rainbow, we're trying to come back up into the rainbow. We've regained some of our longer term moving averages, but we're still battling with some of the shorter term moving averages. And then we were able to get back above the 200-day moving average after Tuesday. Well, we dropped below that on Wednesday. So the longer we stay below that, the more negative the long-term picture becomes. So what is our outlook? We're still out of correction territory. We're still in an intermediate term range. We're still potentially near that short-term double top if we go higher. We're coming up to the end of earnings season. There's still the battle between growth and value. There's a lot of economic reports coming out on Thursday with weekly and continuing jobless claims, durable goods orders, the current account balance, and then the IHS, which I just know it as the PMI, the Purchasing Managers Index, and then the different geopolitical events, Russia, Ukraine, what's happening in China, the NATO meetings. Just because the president is now in Europe, that can always either be a positive or negative catalyst depending on what happens. So what are our scenarios that we're looking at? Are we still possibly reverting back to the previous trend, which was negative, or is that becoming irrelevant? Each day that passes and we stay farther away from those low prices and we don't really show a real significant decline, this is becoming less and less relevant. Then, but on another, you see I have an A, so this is one scenario that we're looking at, but it's not looking as possible, but of course anything's possible. The other scenario is that we climbed pretty far, pretty fast, so that we're overbought on a short-term basis and we have resistance overhead, and we could be bouncing down from that. If we're looking to go up, it does look now like we've come up out of a base. We've had enough days go beyond us and we're high enough above the lower prices that we had that we can say that that is a base. Now, are we going to come back down to that base and visit it? Are we going to go flying by it and just wave as we go lower? That has yet to be determined. But right now, our oscillators are still positive, even though they weakened slightly on Wednesday. And the moving averages, if we're above, if price is above a moving average, it's now providing support, but we still have some other moving averages at higher than current prices that are probably providing resistance. And then this is probably the least likely scenario right now because our ADX is still well above 20. It shows that we are in a trend. But if we chop sideways without these really wild swings, we could get back into a more trendless environment. This is where you would look at doing more credit spreads or iron condors or things that are more market neutral. So what's our overview? We're still positive overall, but we're still in a range. And then short term, we are positive, but we're pulling back from some overbought levels as well as hitting overhead resistance. Intermediate term, we're still positive there. Our oscillators are positive. Some of our moving averages are providing support and some providing resistance. Long term, we're now back underneath the 200-day moving average. And the longer we see underneath that, the more negative it becomes. So thank you. I hope this snapshot video was valuable to you. Please feel free to check out the longer edition of the daily video if you find that helpful. And I will talk to you next time.